Hello guys. So we're looking at gold, and I'll be doing some trade breakdowns. No, one trade breakdown in particular. So today is currently Saturday, but I'll do the trade breakdown for the trade I took on Friday. So I was able to take. Actually, took two trades on. Let's look at the 15 minutes so we can see the trades I'm talking about. So on the 15 minutes, we have. Well, let me drop down to the five. It's going to be so much better looking at the 5 minute chart. Okay, so on the 5 minutes, you can see here we have this trade here, this trade, and this trade, right? So these were the trades I took. I took this trade, but this trade I actually broke my rule on this trade, right? So when I start doing the trade breakdown, I'll go over it. But I broke my rule on this trade, right? I did not execute this trade, and then I executed on this trade, all right? So these were the two trades that I took, but out of these three trade setups, this was the one I was meant to take, right? Because this one was in line with my bias and it was in line with my rules. This trade was not in line with my bias, right? Was not in line with my bias, but this is the trade that I took, and this one as well. So yesterday, being Friday, like I broke a lot of my rules, despite the fact that I was able to make money on the trades, but I broke my rules. So that's actually a problem. But let me start from the daily. Let's go back to the daily and let's break everything down. Let's break down the PDRAs and what my target was. So Thursday we saw gold price crash. We saw a huge crash, right? And something we can see is price took out stops here and stops here, right? So we know that the order flow for gold is bullish, right? So this move to the downside, we saw this as a run on stops, right? A run on stops. That's why it was so aggressive, right? That's why price was so aggressive to the downside because when we're having a bullish order flow, any run on stops, we see that as um, any run below old lows, we see that as a run on stops. Because if we take a look at this, this is actually our swing low down here, right? And this is our swing high. So this is not a swing low. This is not a swing low, right? This is not a swing low. This is not a swing low, right? So what we can see is this low tried failed to break this high and it's gotten broken now. And we have this reversal into this other block, right? What a lot of retail traders will want to do from here is look for short opportunities, right? But what they don't see is the fact that we are just in premium. We came into discount, sorry. So I said you look at the swing low and look at the swing high. And you can see what the price do. Price reverse back into this 50% equilibrium, right? This is a discount zone. And we have this BPR on the daily time frame within that discount zone, right? Now we've made this pullback to this um, bearish order block, right? People are expecting to see this as a bearish order block to continue the sell. But what we're expecting to see is this bullish order block to fail. So what I want to see is a break above, a retest of this, and continuation. We have this daily PDRA we want to see price reach into this fair value gap here. And you can see our fib extensions go past that, right? And on the monthly time frame, we also want to clear out those highs. But for the meantime, this is the drawn liquidity that we're looking for, this fair value gap here. So this is my own bias. So I'm still bullish, right? I'm still bullish on gold. Now, seeing that I was bullish on gold, this is Friday's candle. This is Friday's candle, right? You can see we had the bullish close on Friday after closing bearish in this level, right? Now, seeing this pullback, like I said, a lot of people want to see that continuation to the downside, but what I want to see is continuation to the upside. So, if going into next week, if I start to see continuation signs to the upside, then definitely you know that I'll be looking for buys, right? To take out these highs, and come into this level. So, that aside, you can see that I marked out this order block, this bearish order block, as a premium array, right? As a premium PD array, right? And that is to say, for Friday, I was looking for price to come back into one of these levels, either this or this, right? And you can see that price actually fulfilled this level, right? So this was my analysis. This was my idea. I wanted to see price come back to fill to test this order block, right? Because that's what everybody wants to see. That's what everybody's waiting for. Everybody's waiting for that pullback, right? And I was just trying to see price do that. These were my targets, right? If price was going to be bullish on Friday, these were my targets for exits, right? And then looking forward to next week. So that was my target for price. And you can see what happened throughout. You can see where we have Thursday low of the week, right? You can see where we have the opening price. This was Monday's opening price, right? And that's using New York time, right? Midnight in New York on Monday. This was the opening price, and you can see how we had the opening price. We had, and just above the opening price for the week, we had that PDRA that I marked out on the daily time frame, right? And we still have this imbalance to fill to the upside, right? So look at this imbalance, right? And you can see that price has started to fill the imbalance. This is probably a 50% retracement. And obviously, people are looking for, like I said, they'll be looking for sales at this point. But I'm looking for price to continue. We have some equal highs up here on the lower time frames. I'm looking for price to seek that liquidity. And then we have 1987 500. I'm looking for price to run that out and then eventually come into 1995. That's my own bias, right? That's my own bias. So this is the 4 hour. So we can see we have Friday's open price, we have the week's open price, we have the low of Thursday, right? So I'll drop down to the 2 hour time frame because I want to show you this PD array right here. So let me get rid of this one because this one was not filled. So let me move this box so you can see. Can you see this fair value gap that we have here? Right? Can you see the fair value gap we have here? We had a gap between this candle and this candle, right? And price retested that fair value gap in London session, right? And I don't trade London, so I was not able to get this buys, but this would have been one of the cleanest entries for someone who trades from the higher time frames, like the hourly, right? On the hourly, there would have been good entries, right? And just targeting this PDRA, this would have been a very, very clean trade, 1 to 3, right? This would have been a very clean trade setup for someone who trades the higher time frame. So that aside, this was, as soon as I saw price respecting this PDRA, right? I knew that, okay, now we can see price continue to go to the upside. And something else, this PDRA was below Friday's opening price, right? So let's go to the hourly time frame, right? So we can see the open price for Friday. This is New York midnight time, right? And one thing you always ought to know is, like, whenever you have price below the opening price, like if I'm expecting this to be a bullish day, I was expecting Friday to be a bullish day, and you see price below the open price, you know that that's manipulation. I've said this in one of my previous videos. And whenever you buy below the opening price, expecting a bullish day, that means you're buying at a premium price. So this was a really good entry point for gold, right? This was a really good entry point following our bias, right? And on the hourly, stops will just come below this bearish candle here, right? And this would have been the target, right? Very easy trade, very simple trade. So this was below the opening price for Friday. So this was buying at very discounted price. So this was a good entry. But that was not my trade, right? Like I said, I've shown you my trade already. So let's just jump into that and break things down. So we are looking at New York session. So I have all these psychological levels that I marked out because I'm using them on like the lower time frames. So on the lower time frames, that's when we get to actually use these lower time frames. This was the trade from Thursday, but I didn't do a breakdown on this trade. So let's look at these ones. So Friday was very interesting. I broke my rules on this day. Broke my rules on this day. Let me take price back. I think it's important to take price back at least to this point. Then let me take price to this point. Good. So let me drop down to the 1 minute and break down these trades real quick. So this first trade here, I executed this trade by 8:10, and according to my rules, I'm not meant to trade until after 8:30, right? 8:30, that's when I should be taking my first entries. And you can see what we had by 8:30 here. You can see this setup that we had by 8:30 to the upside, right? Very aggressively went into this week's opening price, right? So this was the trade. This was the first trade according to my rules. So this was the trade I was meant to take. And this trade, remember we are bullish. We are bullish on Friday, right? So this trade actually aligned with the directional bias. So this was the best trade that I should have taken on Friday. Right? I tried to get the longs. Right? This trade was in line with our directional bias for that day, but at the same time, it was wrong timing. So I shouldn't have taken this trade, right? So that's one thing I want to point out. That's one rule broken, right? And another rule is I am meant to take one trade a day. This is why I did not execute on this trade, because after taking that loss on that trade, right, I had already taken my trade for the day, right? So this was meant to be my trade, but could not execute on this trade, seeing as I've already broken the rule with time and I'd already executed one trade for the day, right? Which means I'm not supposed to take a second trade, right? So I didn't execute this trade, right? So let's get rid of that. And just to do a quick breakdown of why I was going to take that trade, or why that trade was a good trade idea. We saw price take out this low, right? We saw price take out this low, which means, remember, when we're in a buy program, any run below old low is a run for stops, right? That's a run for stops. We had this fair value gap, this bullish fair value gap. Price broke below it, broke back above it, and then as soon as price closed above it, that was an entry for us to take price to the week's opening price, right? And we have a psychological level there to 1960, right? So that was my target. That was the reason I wanted to take that trade. Eventually ended up not taking that trade, right? So moving on, this is the actual trade that I took. This one right here. Now, after price ran into the open price for the week, we started to see we started to see weak rejections. And remember, this is 1960. 1960 is a psychological level. So we are seeing price rejecting off of two key levels, right? The first one is 1960 psychological level. The second one is the opening price for the week, right? So we saw one week rejection, another week rejection, and third week rejection. I remember I was watching this market live, so I saw the volatility with which price, or the speed with which price was moving at these levels, right? So it was heavily rejecting to the downside, right? Price was heavily rejecting to the downside. We fell below 1958, right? And we tested 1958 with this bullish candle, right? With this bullish candle. And then we broke down into this level. Now, what I was seeing here was, let me get rid of this drawing first. What I was seeing here was this week, Friday's open price, right? I saw that price did not test Friday's open price, right? We had this little price didn't test Friday's open price, right? So what we're seeing here was like price ran these highs, ran these lows, price ran these highs, and I'm saying, okay, price could possibly run these lows again as another stop hunt, right? And that was just based off of intuition. So this last trade I took was based off of intuition, right? It was just based off of like experience observing markets over a long period of time. And I'm like, okay, price could actually come for these stops below this low and then do the same thing that it did here, where you run out the stops and continue to the upside. Another thing we had here, we had equal lows here that I marked out, right? We had equal lows here that price could come for, and you can see price eventually came for that, right? But this was my idea. I was like, okay, price could rebound off of Friday's open price and continue to the upside. So as I saw price cooling down, price left this bearish order block right here. So let me take price back to this trade, my trade entry, and let me just walk you through what I was seeing in the live market at that time, right? So now in my mind, I'm saying price wants to come for here, right? And this is me sitting by the charts, and I'm done for the day, right? Because like I said, I've already taken one trade, and I sat out of this trade because I'd already broken my rule of taking one trade. So what I saw next was price made a retest of this candle, right? And as price retested this candle, what just came to mind was this is another block, right? This just came to mind that this is another block, and we're going to go for this lows, right? So this was why I executed my trade right here. I had my stops above here. Stops were very tight, and I had my targets for this low, right? So this was my entry. It was something like, I think it was a 1 to 5. Yeah, this was a 1 to 5 trade. So this was my entry. My stops were just above here. It was like a 6 pip stop loss. This was a very, very crazy trade. And this was my target, right? And this was what just happened. And we got filled on that position, right? Very, very quickly. In less than about maybe 5 minutes, price ran to our target, right? So this was a trade that I took. So at the end of the day, I ended up taking 2 trades, which, despite the fact that we ended up being profitable for that day, like I broke 2 rules that day. And the first one is like trading before 8:30 New York time. That's 1:30 Nigerian time. So trading before 8:30. And the second is taking 2 trades in a day, right? Because I'm meant to take one trade and be done, right? That's the rule. But I ended up taking 2 trades. So despite the fact that we made money, we broke the rules. And breaking the rules is not something you want to do, right? You don't want to go against your trading plan because that's going to reinforce bad habits. Because now, if we say, okay, we're allowed to lose one trade and take another trade in the same session or that same day, this means that subsequently I could start taking positions that are not even that do not even align with my plan. So you can see for this trade doesn't even align with our directional bias for the day, right? We are bullish for the day and we are taking a bearish sell setup, right? So that goes to tell you that this trade was very, very much outcome based, right? So when I say outcome based, it means that the sole purpose for taking this trade was profit, right? Maybe I was feeling bad for taking that trade early and I wasn't comfortable with the results, seeing as it was a loss, and I was looking for a way. Psychologically, subconsciously, these things happen. You might not even notice, right? So subconsciously, I believe that I spotted this trade because I was still looking at the chart, and that's why I entered this trade. That's why I took this trade. So despite this being a 1 to 5, and despite this being a big win, it's not something that I'll say I'm really proud of doing because that's just outside of the trading plan. And the further away you go away from the plan, the more mistakes you'll be prone to make. So this is the breakdown for the trade. 5 hour, but at the same time, not something I would want to do again. All right. Because as you can see, at the end of the day, price still ran into our PDRA, right? So if I was patient enough for price to develop, right? Now there are 2 trades I could have taken. This one, or we have probably waited. You can already see this fair value gap entry right here, right? You can already see price took out this lows, took out this liquidity here, tapped into this fair value gap, and then I'm sure price will just continue to the upside. So this could have been another trade that I could have taken, right? So I will just end it here, and I'll see you guys in the next one.